the revelations pouring out of the Paradise Papers have once again raised questions about the use of tax havens and how wealthy individuals and corporations are able to use such structures to legally shelter their money from taxation. The huge leak of more than 13 million records was obtained by German newspaper Süddeutsche Zeitung and shared exclusively in Canada with CBC/Radio Canada and the Toronto Star via the International Consortium of Investigative Journalists, ICIJ. It shows how individuals and corporations have used offshore accounts, engaged in creative bookkeeping and exploited loopholes to legally avoid taxes. But the laws that allow the use of tax havens exist for a reason. You don't want to throw the baby out with the bathwater, said Walid Hijazi, Associate Professor of Economic Analysis and Policy at the University of Toronto's Rotman School of Management. These structures are there to help Canadian companies do business in the global economy. When the structures are used in the way they were intended to be used, it's good for the Canadian economy, Canadian employment. But some argue that such structures end up costing the government billions of dollars in potential tax revenue, money that could be used to support much-needed social programs. As well, critics argue such tax havens have given rise to aggressive and controversial tax avoidance schemes, through which firms are created in name only, with no staff or offices, and used solely to lessen their parent company's tax burden. For example, the Paradise Papers revealed the case of Stephen Bronfman and his ties to an offshore trust in the Cayman Islands. One of the issues raised here is whether the trust was really managed offshore, meaning it would be eligible for a huge tax break, or in Montreal, where it would be subject to taxes. The Paradise Papers also shed light on Nike's scheme to shift billions of dollars in profits to Bermuda from Europe. According to the ICIJ, Nike created a subsidiary in Bermuda which held ownership of the company's swoosh logo and other trademarks for markets outside the U.S. This meant the Bermudan subsidiary was able to charge trademark royalty fees to Nike's European headquarters. And this shifted billions in profits away from Europe to tax-free Bermuda where Nike has no staff or offices. Meanwhile, the Paradise Papers also revealed how the Bank of Montreal discussed cutting the number of executives it needed to be flown to Bermuda a couple times a year so one of its subsidiaries, based there with no staff or premises, would still be eligible for tax breaks. Here in Canada, companies are indeed encouraged to use offshore havens, said tax law scholar Arthur Cockfield. The argument goes that such offshore accounts allow corporations to go global and compete in the international marketplace. Those in favor of tax havens say that if an international competitor was able to take advantage of a tax haven, and a Canadian company was not, the latter would be at a competitive disadvantage. However, Cockfield says, while big business is often correct to say it needs tax breaks, often the tax breaks are overly generous.